Imagine this, you're a Toronto condo investor and you just lost $20 million. That's not a typo. It's the harsh reality for one investor who purchased 135 pre-construction units with an average price point of $750,000. His total investment was $101 million. So how did things go wrong? Let's break it down. So the problem. The investor bought these units at a 20 to 40% premium, expecting the Toronto real estate market to continue its upward trajectory. Unfortunately, the market didn't appreciate enough to even break even. Between 2020 and 2024, the annual growth rate for Toronto condos averaged approximately 4% or less, with some periods showing declines as it was a tough market for Toronto condo investors. The market appreciation fell far short of the premiums paid, leaving the investor with properties worth significantly less than their purchase prices. Losses range from anywhere from 6 to 26% per property, depending on the specific unit and timing of when it was purchased. Now, what went wrong? First, overpaying for pre-construction condos. Here's the thing. Pre-construction typically trades at a premium, anywhere from 20 to 40% above the market value. The bet here didn't pay off because the market didn't appreciate to the point that they locked in that pre-construction contract. 2, market slowdown. Over the past 4 years, Toronto condo market saw minimal growth, unfortunately, and even periods of depreciation due to rising interest rates and COVID-19. 3, liquidity issues. Managing such a large portfolio made liquidating or holding onto the properties a complex and costly decision. Now, here's another massive challenge is mortgage limits. When you have this quantity of properties that you've secured, banks, Schedule A banks only lend up to typically 5 properties per borrower. For 135 units, securing financing would have been nearly impossible, forcing the investor to either close with cash or resort to private lenders. And even at one point, private lenders wouldn't even fund them anymore. Closing with cash would require an additional $100 million or more. Now, you may ask, what are the options for an investor like this who has this many units under contract? First option is buy and hold for a 5 to 10 year period on as many of the units they've got under contract. First, as a pro, this gives the market time to recover and appreciate. It also allows rental income to offset some of the carrying costs, where in 5 to 10 years from now, they can exit with a good chunk of their change or at least get their money back. Cons: require substantial holding power to cover mortgage payments, property taxes, and maintenance fees. Just to give you some perspective, if they were able to close on 135 units, on average, if they were putting 20% down, they would be cash flow negative anywhere from $500 to $1,000 a month per unit. On this kind of scale, we're talking about $135,000 on average per month in cash flow negative, which is equivalent to about $1.6 million per year, coming additional out of pocket. On a 5-year hold, do the math, we're talking about well over $6 million. Now, another con would be it ties up capital for an extended period of time, and you're putting good money into bad money into a property that has not done too well over the past 4 years. Now, this story is a cautionary tale about some of the risks of speculative investing, especially in pre-construction condos. Toronto condo market, while historically has been very strong, has gone through some really tough years over the past few years after COVID-19 and the interest rate spikes. With growth rates failing to meet expectations, speculative bets can quickly turn into substantial losses. Always crunch the numbers, consider potential downside scenarios, and avoid over-leveraging yourself. If you can't possibly close on 100 units, don't buy 100 units, even if you have the cash for it. Now, back to you guys. What will you do in this investor's shoes? Hold or sell? Let me know in the comments below. If you found this video insightful, don't forget to like, subscribe, and turn on notifications for more real estate tips and market updates. Until next time, invest wisely and stay informed.